Hello and welcome to Profiles in Risk. This is your overly excited and overly caffeinated host, Tony Cañas. Although I did get really good sleep yesterday for the first time in a few days. Uh, I am pitching my fifth podcast in 2 days. So yesterday, Friday, I matched my old record of recording four in a day. I'm gonna be off the, I'm gonna be off grid all of next week, so I have to get some ahead of time. Um, and today I have with me Jamie Luce, co-founder and CEO at AIR Parametric. Jamie, thank you for joining me today. How's it going?
It's a pleasure to be here with you, Tony. Things are going great.
Awesome. My pleasure. We're recording on Saturday, April 19, because that is the level of nerdiness you have on the podcast today. Two insurance nerds that were happy to schedule on a Saturday instead of waiting a month and a half to schedule.
I
Uh,
prefer insurance geek, but nerd's fine too.
Perfect, perfect, perfect. So Jamie, LinkedIn, it looks like you are in Boston. I actually recorded with somebody in Boston yesterday and with somebody in New York. So my usual question of how's the weather? Yesterday was beautiful. Is it still beautiful spring weather out there?
It's absolutely gorgeous today. Yeah, we're definitely turned the corner into spring. I was out doing lawn work and taking care of things, and getting ready for spring outdoors here in New England. So
Perfect.
absolutely,
And I'm pretty sure that I saw you at a conference
yeah.
recently. What was that, a Climate
Climate
Tech
Tech
Connect
Connect.
conference?
We were in
Perfect.
DC. We saw a lot of really
Perfect.
great people. We heard a lot of amazing insights on climate impact, climate resiliency, lots of different technologies, financial solutions. It was a great event.
Fantastic. I agree that it was a great event. I have been running at 1,000 miles an hour to the point that I have lost the ability of remembering who I saw where. So it could have been PLRB, it could have been InsurTech New York, it could have been Climate Tech Connect.
You
It could
talked to a few people. You talked to
exactly it could have been at the airport, the Delta Lounge, or we could have been sitting on the plane next to each other. I honestly do not remember. Okay, so Climate Tech Connect, I agree, it was very good. Um, so we always give the guest a chance to give the elevator pitch. What is AIR Parametric?
Well, Air Parametric is plugging really big holes in the insurance world with parametric insurance products that are paying customers for their economic losses from extreme weather. Events like extreme rainfall, extreme temperature changes, all do significant economic damage, and they're not being covered by traditional insurance products. And what we've been doing for the last 18 months is building products with industry representatives like people in the agriculture space, as well as MGAs and agents and brokers in the more general program space to design products that the customer wants, and we're bringing them through the commercial insurance world of agents and brokers, and serving an entirely underserved need.
Fantastic. So distributed through commercial insurance broker channel. Okay, I've been taking notes furiously. So one thing I found really interesting, uh, so plugging in really big holes in the insurance world with parametric
Yeah.
insurance products that are paying customers for the economic losses from extreme weather.
Yes.
Okay, so I was not an economics major, but I do have an undergrad in management information systems, which is a business school undergrad, and I also have an MBA. And I'm also a general nerd who reads a lot about, especially within business. So the use of economic losses, to me, and do correct me if I'm wrong, to me, it's more than just the traditional indemnify of non-parametric insurance, right? So basically, indemnity in regular insurance. This is like CPCU 101 class. Teach like insurance is meant to get you back to where you were, right? Minus your deductible, right? It's not meant to get you in a better place, and because of that, uh, indemnity based traditional insurance tries to be careful to not pay you if you haven't had an actual loss. But you can definitely have had an economic loss uh,
Absolutely.
without a hit to the bank account yet, kind of thing.
The way that I like to think
Yeah.
about it, the way we talk about it with agents and customers is there's lost revenue and increased expenses associated
Mm-hmm.
with all kinds of weather that is not doing damage to a business, property, or to a building or to equipment. Our traditional property insurance coverages in the US and mostly in the rest of the world only provide business interruption or protection of revenues and bottom lines when there's actual damage that's being repaired or restored. But if you think about things like, for those who are familiar with Superstorm Uri in the February of 2021, when cold and ice shuts down the city of Austin for 2 straight weeks, nobody goes to work. There's a lot of lost economic value by virtue of that kind of event. But cold and ice generally don't create an awful lot of damage. They melt away and everything goes back to normal. So there isn't an actual physical damage to be able to report a claim under a
Mm-hmm.
traditional policy. So this is an area where extreme weather data has helped us build parametric solutions that pay when the weather event occurs a reasonable amount of money to pay for the economic loss associated with it.
Fantastic. That makes perfect sense to me. And uh, COVID was a solid example
Yeah,
of this.
COVID's where the entire community realized that we don't just pay business interruption doesn't just pay you when you aren't able to operate. That you have to have physical damage, and most courts have basically agreed that, COVID didn't create physical
And
damage,
and
therefore it was not.
I'm not a lawyer,
Yeah,
but I agree with that, right? The policy was not meant to cover business income losses. That did not come from physical damage. It was not priced to do
right.
that either,
That's
right?
correct.
So
Not a control.
so, but I am glad that it served as a wake up call for the industry to start creating the products that do cover those type of risks and that are properly priced for those type of
Yeah.
risks. And the more I learn about parametric, the more that I do think that parametric is the right tool to do that, right? It has the advantage of being adjusted quickly, or being able to do to pay out a claim quickly. It has the yeah, it has several advantages that other guests have mentioned and have educated me. But
Yeah.
right,
And
so
it,
so uh, I think you're the first guest I have on that, even among the ones that have come around to talk about parametric, that has talked about extreme rain and extreme temperature change.
sure.
Okay, so what are the yes, what are some examples of that? So the
Sure.
Austin example was great, but what kind of businesses get affected by extreme rain or by, I would have never thought of temperature change as something that could cause business interruption.
Well, our business right now, we have two products that we're
Okay.
bringing to
Mm-hmm.
market. One of them is principally built around the concept of heat and the impacts of heat on different business enterprises.
Mm-hmm.
The first industry that we've been selling to is the agriculture space, primarily focused on livestock. The
Mm-hmm.
dairy industry, I can tell you that if you talk to a dairy farmer, the thing that gives them the most concern, other than the price of milk and the fluctuations, is whether or not they're going to get hit with extreme heat conditions in the summer, because heat and humidity brings down their revenue. It changes the productivity of the cow very
Interesting.
quickly. So if you can see, when extreme heat spells of 3 days, 5 days, 7 days, animals that live primarily outside are exposed to that, their bodies go through a chemical biochemical change. They slow down their production of milk, the quality of the milk, which is a significant aspect of the revenue from the product, also goes down. And there's no current solution till we brought Milkshake to market, which is the name of the
Hold
product.
on, it's called milkshake.
It's called
Oh
Milkshake.
my God.
Um,
So you had told me that it was called milkshake, but so for the listeners, I do my best to not have in-depth conversations before the podcast, because so that you can see my sincere reaction. So number one, this is a genius idea. Let's start there.
thank
Number
you.
two, I spent 10 years of my life in Iowa and like 3 or 4 in Ohio. Um, my girlfriend grew up in a dairy farm. It's not an active dairy farm anymore, but she has plenty of family that still run active dairy farms. And I had no idea that cows are less productive when it's too hot. It,
They're They're like us. They're just like us. I mean, they're mammals, and there's a zone of temperature and humidity that they're generally comfortable in. The cooler side is generally where they're actually more comfortable.
okay.
And as it gets warmer more consistently, their internal body temperature gets hotter and hotter. They go into what's called heat stress, just like a human does. Like we have laws that prohibit the amount of time workers in construction and landscaping can be outside in extreme heat because it can literally hurt you or if not kill you. And the same is true of an animal in the livestock space, and the dairy cow is a very great example, and that's what we built Milkshake for.
So um that explains why we do dairy farming in Ohio and Wisconsin and not in
Correct.
Florida.
Well,
Uh,
you'd be surprised. There's dairy farming about everywhere, but there's
okay.
a business model, to your point, that is very weather dependent. And you see a lot fewer high-end dairy farms in the southeastern US because
Uh-huh.
the ability to produce consistently high quality, high butter fat, protein type of milk is not as easy in those parts of the country, or it's much more capital intensive. It requires
Okay.
a lot more climate controlling of the outcome because there's so much more heat stress in those regions. But
Oh,
you'd be surprised. There are dairy farms, Tony, in Death Valley, Nevada. There are dairy
really?
farms in Arizona and
Wow.
Mexico and West Texas and California Central Valley, all over the upper Midwest that you were talking about. There are dairy farms in a lot of different warm areas, but generally they're in warm areas that have low humidity because the humidity is the amplifier to heat stress. So
Okay.
if you have high temperatures but relatively infrequent humidity, you can get a lot of good days to produce milk in hot areas and arid areas. But that's why our product is valuable because with warming temperatures, what's happening atmospherically is there's a lot more water vapor and moisture in the air because the air is warmer, it can hold more. So areas that have been traditionally more arid are becoming a little bit more humid. That's also part of what's giving rise to a lot of the more extreme convective storm events and things you're seeing everybody get concerned about in the insurance industry.
Absolutely fantastic. And I'm calling it right now. I mean, I'm inventing a new award from insurance nerds. We might end up co-branding it with covers. What are they called now? She just merged and changed the name. Uh, Motiverse. Yeah, we might co-brand it with Motiverse because they do awards. Anyway, I'm coining it right now. The new award for the best insurtech product name of 2025 goes to Milkshake.
I love it. I love it.
I we we'll get something out to you to make it official.
I'll get you a
Um,
t-shirt, Tony. Thank you for
thank you, thank you.
that.
That is fantastic. By the way, if you print stickers, you will get free marketing at 35 InsurTech conferences a year because every InsurTech sticker I get goes on my magic bag and it goes everywhere with me.
There we go.
All right, so milkshake.
Yeah. So
Look.
Milkshake's really the first product we've brought to market for the heat space. We're selling
Mhm.
it right now, getting great traction in the dairy and in the cattle industry because
Okay.
not to get too far afield, but the cattle growing business, when you're raising cattle for beef, it also has a tremendous impact on their business also. But you asked about rainfall, and
Hmm.
we have think about the rain that followed Hurricane Helene
Hmm.
last summer, last fall. The rainfall in North Carolina that we typically talk about as flood, but it's
Hmm.
not a flood. It's a rainfall event that leads to a flood.
Hmm.
We're doing is providing, there's a lot of economic damage done for that region, well beyond the people who were actually flooded. When you have areas of concentration like the Palisades for a wildfire or the areas in North Carolina that were flooded, or if you remember 2 summers ago in Montpelier, Vermont flooded incredibly heavily.
I
Town, the
remember.
capital of Vermont,
Yeah, no, no.
that whole region goes through economic damage. Even the businesses and the people that are not
Mhm.
flooded because what ends up happening is everybody becomes a volunteer, employees
Mm-hmm.
schools out, employees can't work, you have a lack of utilities. Your customers' behavior changes. If you're running a small business and for 2 weeks you have no customers,
Oh my God.
incredibly powerful. So
Absolutely.
we built weather.bi for that purpose, and we are currently bringing that to market with agents and brokers as an additional add-on solution for their normal property casualty products that they bring into the market every day.
Weather.bi. BI as in business insurance.
They're business interruption, but
Business
yes,
interruption. Okay.
that's
Now,
that's that's the inside insurance knowledge. Not that anybody in the care, in the client side will understand that, but that's
is the
exactly.
website going to be weather.bi? Is there such a thing as a .bi?
It does not, we don't have a website for that product yet. So we
Okay.
have one for Milkshake, which is milkshakeins.com. If anybody wants to go check it out, we have testimonial videos, a product video, if you want to learn about heat stress, you can go learn about it there. Um, and really, maybe I'll dovetail Tony into that.
Perfect.
There's a lot of us in the parametric space, and we're using these tools to bring them into market. And I think what we're finding at Air Parametric is there's a lot of work to make the products relevant and sellable to the policyholders because they're not used to thinking about weather in the way that we are,
Mm-hmm.
coverage in the way that we are. And so we've spent quite a bit of our time and our energy as we've bootstrapped our business spending time with customers, spending time with agents and brokers, and building the confident demand of the product and the way to sell it. And then we start selling it. I think we see Parametric as a tool to go solve problems. So, what we've been doing is solving problems with the Parametric tool. One of them is now Milkshake. It solves a very important need for livestock farmers and for heat stress. Weather BI is going to do the same thing for lots of different weather perils, including temperature, including rainfall. Eventually, we'll have wildfire, we'll have tornado, not for the damage it does to your business, but to the economic damage if you are not actually damaged. It pays you for the kinds of losses that are not covered by your typical insurance policy.
This is fantastic. And I'm looking at the Air Parametric website, airparametric.com. Uh, in 2023, global severe weather coverage gap 69%.
That's a
So
it's a growing number worldwide and in the US, Tony, because I think, having come from property casualty underwriting and product leadership and sales and marketing, I can tell you more effort has been made to use the advanced data analytics and technologies for carriers to figure out what not to write than what to write. And I
absolutely.
feel like we've become, as an industry, more focused on the risk aversion and the usage of tools to minimize our downside. What we're doing at Air Parametric, and I think some of our peers in the parametric space are using that same concept to actually figure out how to cover things that are not covered today. Something that even when I started in this business 27 years ago, I was told there are no new tricks in insurance. There's nothing new to be covered. And that was pre-cyber, pre-employment practices liability,
Wow,
and
even
now
EPLI.
pre-parametric. So I take a lot of pride and I feel really good about our efforts not to reinvent property coverage, but
Mm-hmm.
to actually augment the coverage that customers already have. And I think that's really important
Mm-hmm.
because a lot of parametric insurance solutions have been essentially redesigning
Mm-hmm.
a product risk taking for, say, cat hurricanes or earthquake and those kind of things, which are all valuable uses of it. But I do think there's a whole wide world of solutions that we're talking to customers about every day for in that Air Parametric.
All right, fantastic. So for the listeners, so agencies who do a lot of commercial lines, a lot of ag,
Mhm.
uh, how do they get access to the product?
So right now we have 5 distributing partners. You can see
Mm-hmm.
them on our website. I'll plug them as Farm Bureau of Michigan, an MGA name called Lucid, Rockstone Ag.
Love Lucid.
Yes, yeah. Julie Richt and her team are fantastic.
Loved it. Yes,
Shout out to
love them.
Caitlin Thompson and her team. They're fantastic people. If you're not familiar with them, get to know them. Great.
So, which farm bureau? Because there's 18 farm bureaus,
Farm
no?
Bureau of Michigan
Of
is our
Michigan,
first
perfect.
Farm
So,
Bureau
okay,
relationship.
so
Yep.
Farm Bureau of Michigan, Lucid. Uh-huh.
Rockstone Ag,
Uh-huh.
firm out of Minnesota called AgriCap. They do specialty agriculture products. They're a part of the
Mm-hmm.
Nesbitt regional agency group up there. And a commodities hedging broker out of Chicago called Commodities Ingredients Hedging, CIH.
Okay.
Any one of those facilities, or if you're not sure, you can send us you can go onto the website at milkshakeins.com, enter a few things, come to us. Either a customer can come to us or an agent broker, and we'll be happy to get you set up.
Fantastic, fantastic. Now, Farm Bureau of Michigan, I'm assuming doesn't function as an MGA, but the rest.
No, they're an agent. They actually have their own agency. They have an insurance
Mhm.
company, but then they also sell a lot of products to their customers that they do not actually underwrite in their own
Yeah, no,
company.
no, but what I'm saying is for agents listening, if they're not a Farm Bureau of Michigan agent, chances are they can't access you through Farm Bureau of Michigan.
That's
So
correct. Yes.
Lucid and the
Lucid and
others.
Rockstone would be the right.
Perfect.
Yeah.
Perfect. Perfect. So, so cool. All right. All right. All right. Okay. So I am always curious on the origin story.
Yeah.
Um, and before we go there, actually, I'm skipping ahead of myself. Okay. So we are recording on April 19th. This episode will probably go live late May, middle to late May. Is there anything that is in the development pipeline, not live yet, but that you're excited about and that you can already talk about, given that this will come out late May?
We are right in the middle of our milkshake selling season, so that's taking up the majority of our focus right now. We are Weather.bi's launch date is probably something we'll have close to figured out by the time that this airs, but we don't have that ready, so I can't quite. It's kind of under wraps, but the partner and I are getting that all ready, and I think people will be excited to see that in the summer. So be on the lookout for Weather.bi coming through some of the larger retailers in the country.
Fantastic. Fantastic. All right. So I am always curious about the origin story, right? Looking at your LinkedIn, okay, I don't believe that you're from Ohio and like that inspired you to create a product for the dairy industry, right? It looks like you went to school in Massachusetts. You currently live in Massachusetts. I'm guessing you're from New England. Uh,
Actually, I am. I did go to school in Ohio and went to school and grew up in Ohio, but I have been
oh, I
in
thought
the
Worcester
last
was
15 years.
Worcester, Massachusetts. No, Worcester,
Worcester,
Ohio.
yeah. So like, let's. I live in Worcester. I live near Worcester, Mass. But I went to school at the College of Worcester.
You can see why that fooled me.
It always does for those
Okay.
folks that don't know College of Worcester. But I grew up, yeah, I grew up in the Midwest and I started my career with Westfield Insurance and
Love
grew
Westfield. Okay.
as an
Uh-huh.
underwriter and an agent broker, sort of representative in the field. Lived in Minnesota, lived in Wisconsin, lived in Illinois,
Uh-huh.
worked at AIG for a good bit of my career early on, learning how to really be aggressive with risk and learning how to take limits and create craft policy forms and win using coverage as a way of winning in the
Mm-hmm.
marketplace. And then I spent the bulk of my career with Liberty Mutual,
Mm-hmm.
learned how to manage large, mid-sized commercial risks and sell those in through the largest brokers. Marsh, Aon, and Willis was a big part of my job for a while. And about 15 years ago, I was asked to lead their middle market property casualty underwriting group here in Boston. So my family and I moved from Chicago to Boston, and we've made New England homes for the last 15 years, and
Beautiful area.
really love it here. My daughters have always enjoyed living here and growing up here, and so I spent the most recent 4 years working at Jewelers Mutual and running their commercial group. And it's really there where I kind of started piecing together the concepts behind AIR Parametric. One is I was redesigning the commercial organization there with the senior leadership team, Scott Murphy and Mike Alexander, who run that business, and we bought an MGA principally to drive a wider strategy for commercial risk there at Jewelers Mutual. So I got very familiar with MGA management as well as working with London and Lloyd's cover holder programs. And some of the people involved in that transaction had some ideas around parametrics, which I'd never really considered before. And so I kind of had this idea behind parametrics and an MGA. And as I got to building on those ideas and working with other people and some of my partners, they had the agriculture connections, and that's how we came together and built Milkshake, which was the first product and really became the genesis for the business.
Fantastic, fantastic. I was gonna say that like after a really, really fantastic traditional carrier career. I mean, you made it to SVP, CUO for business insurance at Liberty, then SVP North American Commercial Insurance for QBE, then EVP commercial for Jewelers. Like with a background like that, I would not have expected to go create an insurtech, right? It's one of those like, and I know this because I recruit for roles like that for an insurtech, right? And people with your background tend to be too comfortable and unwilling to take the risk of going to a startup. So good for you. You must have really believed that this was just desperately needed in the industry.
Well, I definitely believe in what we're doing, and I think there's a huge opportunity to do some good with these products, but also build some really positive and profitable revenue streams. And beyond that, I kind of mentioned earlier about kind of I haven't seen us as an industry, and in many of the places I've been, I haven't seen us really do all that we can do to actually become relevant for the customers. I think as insurance carriers, we're not as relevant as we once were. In fact, I think it's only by doing this kind of work as an insurtech, as a startup, that I get to build and become produce something that is more relevant.
Mhm.
And that's sometimes disheartening, but it's for me, it's been really rewarding and exciting and risky and terrifying and thrilling all at the same time. So
It's the innovator's dilemma. We are absolutely seeing it in the carrier space. Um, I've never sat at those levels, right? My carrier career was very much entry level. I was never even a manager. So this is based on conversations and just looking in from the outside and my experience trying to sell into the carrier space and different books that have been written about how to innovate in the carrier space, Brian Falchuk and Rob Galbraith and others. But basically, in the traditional carrier space today, uh, number one, the carriers that survived for 100 years, some of them survived by being very conservative in the way they underwrite. Uh, and my belief is okay, be conservative in the way you underwrite. Don't do things that risk the balance sheet, but be progressive in the products that we create, in the way we grow talent, right? In the way we market those products, in the tools we give our employees, etc. Uh, but it feels like that at the big carriers especially, um, the easiest once you've made it into a level where you actually have decision making power, which you did, uh, the safest thing you can do is let decisions be made by committee and not take any risk, right? Uh, I I always remember. So I grew up at Nationwide myself. So I did 1 year at Farm Bureau of Iowa, followed by 4 years at Nationwide in a variety of different roles. Then a year at American Modern, which is part of Munich Re, and then 2 years at Liberty, and then I became a recruiter. Uh, but at Nationwide, I went through a leadership development program called the Financial Leadership Rotation Program, and I got to see behind the curtain a lot. And I got to meet the CEO at the time. So bad with names. Steve, cannot remember right this second. It's gonna kill me. Steve, CEO of Nationwide. Steve Rasmussen. Steve Rasmussen, 45 years at Nationwide. Grew up in the company. He retired a few years back, and last year I almost flew to Des Moines to be there when he got up. inducted. I almost said abducted, inducted into the Iowa Hall of Fame, but I had a conflict. The Iowa Insurance Hall of Fame. And the reason I bring Steve up is because Nationwide has a 65-year-old mandatory retirement age for officers. And Steve uh, could have just retired after 10 years as CEO and got off into the sunset. And on the way out, gone, hey, by the way, guys, you really should unify the brands because Nationwide had 26 brands. You should unify the brands. You should rip out all of the systems and move over to Guidewire or something like it. And by the way, you should pull the plug on exclusive agents and make everybody independent, right? But do that after I'm gone, right? He did the exact opposite.
He did it
He
himself.
he,
Yeah.
he asked the board for permission to stay an extra 2 or 3 years, I think it was, to do those three massive transformations, right? Massive respect. Whatever people think about the success or not or lack of success of those massive transformations, which all happened after I left the company. Uh, eh, Massive respect for him for doing that. The majority of insurance executives take the opposite approach. Well, that's my observation, right? And please, like you've actually sat in those seats, so feel free to disagree with me if I'm wrong.
I think I think largely you've said things that I've seen. I mean, it's I would say it's really when you're managing a large balance sheet and a large company, there's a lot of risk in the decisions and the direction, and I think by and large there's more incentive to not taking risk in most cases than incentivizing to take risk. And that's just a general statement. It's not to say that
Yeah,
everyone
yeah, yeah.
sees it that way, but I think that that causes a certain mindset about trying new things. Um, and I think there's also an issue that is kind of derived when, in our industry and the commercial side. I don't know the personal side as well, but I know there's some issues in this regard as well, which is there's a legacy set of challenges that are still being dealt with when it comes to technology. So mostly when I was a leader at most companies that I was a part of, when we looked at our forecast, what are we doing the next year, the next 2 or 3 years? We weren't starting from a position of we feel like we've got technology good. We feel like we have data good. We were actually starting with a deficit in those areas. And so the idea of, hey, there's a new product, let's build a new product, let's put a new product into the mix, really got bumped up against all the legacy challenges that were going up and a part of our big money, our big problems. And it's generally that kind of thing that gets in the way of a lot of transactions or a lot of improvements for companies. And to the credit of large carriers, I think they mostly a lot of them recognize this, and that's why they fund insurtech organizations and
Yes, absolutely.
because they recognize that the things that we're doing are fueling the
Mm-hmm.
the things they need in the future, but maybe aren't internally able
Yeah.
to bring about.
Seeing innovation departments getting built, seeing carrier VC funds, right? Munich Re has a fantastic VC fund. Full disclosure, we happen to be a preferred recruiter for them. Uh, American Ventures has a great venture fund. American Family has a great venture fund, right? So we're seeing more and more carrier venture funds and innovation departments at carriers. So yes, the work is being done.
Yeah.
Brian Falchuk's the first of his Future of Insurance books is about stories of innovation at carriers. So yeah, it is getting much better. I 1,000% agree. Uh, well, we really like went on a huge tangent, but
Yeah, no, but but I appreciate that because I mean it's a big part of my story because to your point, when I walk around most conferences and talk to people in our space of either insurtech or climate tech or any kind of startup community, there aren't many people that have the kind of experiences in insurance that I have that
mm-hmm,
decided to say I'm going to try to build something brand new from scratch.
mm-hmm.
Some days I think I'm a genius, and sometimes I'm completely feeling the opposite about it. So it's not for the
Not
faint of heart.
for
Several of my
sure.
friends who've been down this path have told me, and they're 100% right.
sure. So in InsurTech 1.0, this is our Tony's definition of InsurTech 1.0 and 2.0. But InsurTech 1.0, in my opinion, was a lot of tech companies who ran out of fintech, easy to like low laying fruits, and they started InsurTech. We didn't even have a word for InsurTech back then, and it was a lot of we're gonna put State Farm out of business in 5 years, and you guys are running a $1 trillion industry on, AS400s and COBOL, which is not untrue, right?
That's super
The whole we were gonna put State Farm out of business for in 5 years. That part they were very wrong about. But it was basically what I call a tech hammer looking for an insurance nail, right?
I
And they did not understand the problem that they were trying to solve. Now the majority of insurtechs that I run into and that I bring on the podcast, and I invite everybody, right? If they're an insurtech, I invite them on. A significant percentage of them are insurance people at whatever level who saw a real problem, who worked in the industry and saw a real problem, and then partnered with technology to fix that problem.
yeah.
Uh, so so uh, so that makes me really really happy.
And I see the same, and I've talked to investors who've been kind of here for a while, and I think they're very much now looking for evidence of how do we know what you're going to do is going to sell? How do we know that? Where's it going to sell? Who's going to sell it? How much money are you going to make when it sells? And how do you know that? So I do think there's a much greater, like, I think sensibility about what's a good investment, what's a good product that can help drive value and actually become a business. Whereas I think to your point, there was a lot of technology being thrown into insurance without a whole lot of where is it going to go, how's it going to do, is belief that it would just cause some disruption, create some new business models,
Um,
which in some cases it did, but a lot of times it wasn't as successful as hoped.
I had a really cool front row view to this happening, and it happened by pure accident. So I was the American Modern field sales manager, territory sales manager for Northern California, living in Berkeley, California, right across the bay. And I was also running Insurance Nerds, which was originally born as career advice for insurance professionals, but which had transitioned when Nick Lamparelli joined us to writing articles and stuff, and eventually podcasts specific about technology. Right, our tagline for a long time has been insurance, careers, and technology. Okay. So because of that combination of the blog and where I was sitting in Berkeley, California, I started getting, we're talking like 2013, 2014. I started getting a lot of messages from tech people and from VCs basically saying, hey, come into San Francisco, we'll buy you a nice lunch and let us pick your brain about insurance. Yeah, awesome. And some of those conversations led to people raising a million bucks, a couple million bucks, basically on the back of a napkin.
Hmm.
Uh, and I run into them again 6 months later, and the idea has completely changed to something completely different. And then I add them on LinkedIn, and like 2 years later, when I go, oh, I wonder what, right? And I look them up, and they're no longer in insurtech at all. Right. That there was a lot of that, and it.
Well, maybe some of what you said earlier, and maybe some of what, I'm experiencing differently is that, without there being a stable of people like myself 10 years ago who were ready to leave their full-on executive
Absolutely.
leadership jobs and dive into this space,
Hmm.
they went with folks that were ready to do that. Maybe they were largely technology and data folks that were ready to take
Uh-huh.
it on. And then they probably had a lot of learnings about what
And
really happens in insurance and what works and maybe what
and
what
and and I think in some cases, and again, this is completely based on my observations, no insider knowledge here. In some cases, the investors did have the good sense, right? Right. They brought in VC money, and the VC had the good sense to say, okay, who's the insurance guy in here? And they rushed out to hire an insurance guy and brought the insurance guy in, and then gave them no power. Basically, like just paid them to use their name, kind of thing, right? They became a figurehead. Um, with no power in the actual running of the company. And like the investors thinking was correct, but without bringing the insurance people as equals to the tech people,
Mm.
things still like went off the rails kind of thing. Things are much better now. I think that most insurtechs today do comply with what I lovingly call the able travels rule, which is do you have both leadership and in the actual employee force enough balance between insure and tech,
Hmm.
right?
Yeah.
So that you can do both sides right.
Yeah, you've
So,
got to be able to. And yeah, it's a unique challenge, but my suspicion is that most technology leaders, particularly if they came out of Silicon Valley, when they talk to senior leaders and anybody who's knowledgeable about insurance, and I've had this conversation with many of them myself, they tend to regard us as being very much not innovative, not wanting to change, not willing to break China, and things of that nature. And I think that's probably not always true. It's just that there are realities maybe that a lot of the tech leaders that were involved in these ventures, they really didn't understand the realities of an insurance transaction,
absolutely.
particularly in different regulatory environments. And so, you know, that probably all happened very naturally with, people with good intentions. But
Hmm.
I do think you're right. Today's InsurTech 2.0 investors and the businesses that are in it are far more sort of ready to say, this is how we operate. This is why what we're doing has value. This is the customer. This is how we create monetary value in our product and our business.
So Jamie, going right back to air
Yeah.
in the long term,
Yeah.
how many more potential parametric products that like do you think there might be?
There's a lot. I mean, I think that we are totally focused right now on extreme weather and building our knowledge and building our expertise around using extreme weather data to craft insurance solutions that are going to be marketable, sellable, add value. But I mean, there are lots of different ways parametric insurance models can be used to take care of things. I mean, there's businesses I've talked about in the past that, have uptime, downtime coverage for cloud. If you're a small business today and cloud is not available because it's AWS or it's Google or Microsoft Azure, your coverage for cyber, if that was because it was hacked, your coverage for cyber is like most of the coverage that's out there don't cover that. So how do you get remunerated for the fact that you can't operate? Well, there are parametrics that are for building coverage for uptime, downtime. I'll tell you one that I'm not working on, but I've heard talked a lot about as we go into space more and more with our business and our government, putting investments out there. There's certain types of solar events and certain types of cosmic events that are occurring throughout our solar system that can have an impact on the economic viability of these kinds of things in the future. So, I mean, I'm not trying to jump all the way to we need a space parametric for solar flares and things of that nature, but these are all events that are having an impact on us. And what I tend to talk about, Tony, is that most people in the insurance industry, when they think about weather and they think about their business, they think about catastrophic storms, tornadoes, earthquakes, and things of that nature. But if you actually reverse the conversation and you ask a policyholder, how does weather impact your business? You get a whole different type of feedback. And all of those are opportunities for us. That's
Uh,
how I look at it.
that is probably the best mic drop moment uh in today's episode when it comes to uh fellow insurance slash insurtech or aspiring insurtech professionals and future founders to learn from. Uh, Historically, insurance has been very product focused, product centered. We need to be client centered, right? Ask the client, how is weather affecting you? How is X affecting
Uh,
you? And then build a product around that need.
I'll give you a great example. We have, it's very easy to come up with the types of businesses that are impacted by weather for most lay people. Oh, farmers, People that work outside construction is impacted by weather, hot, cold, rainfall, cold events, that sort of thing. But I never thought that professional services are actually stuff that get impacted by weather. So if you're a pediatric facility and you book out your month of appointments, and for a week or two, because of rainfall that keeps people away, cuts the utilities, you can't operate, or people stop coming and they cancel all their appointments, you've just lost that revenue. You can't double book yourself 3 weeks later and do twice as many appointments. You have to literally just let those dollars go. You just go without that cash. So when you really ask a customer about these things, you learn things that you hadn't expected. And and I think, I probably have said this already, but parametric is a tool to solve a problem. What we're doing at Air Parametric is solving problems. We just happen to do it with with a parametric type of model and the data and the technology to sort of bring it to life and make it sellable.
Fantastic. One final and very important question that I am asking on the podcast from now on, to everybody. At the beginning, we used to ask everybody, what was your favorite insurance book? And we stopped asking that question because 8 out of 10 people would say the same answer. They would all say the Against the Gods. So we stopped asking the question. So new question, new question. Um, so uh, what is your favorite superhero, cartoon, or art style? And the reason I ask is because I'm going to use that to create the cover image in the style, using ChatGPT in the style of whatever you choose. So
Gotcha.
superhero, cartoon, or just art or artist style.
Hmm. I think, man, I'm trying to think of my favorite artists. And then I'm thinking, would I want my style to be in that style or
don't,
not?
don't, don't, don't
Because I'm like,
overthink it.
what's that?
Don't overthink it.
I mean, like, my favorite impressionist painter is Monet, and I when I went to Giverny and went to his gardens, I was fascinated by
My
that, and
my
just
my
it's one of the most
mom.
beautiful places and most
Mhm,
fascinating experiences to see his life in that way and be able to
mhm.
tour it, and having looked at those paintings for years and seen them in different parts of my life. Um, it's probably as good as I can do for you right now.
Fantastic. That is fantastic. I have been to the Monet Museum in France. Very, very impressive. And my mom, who has spent a lot more time in France than I have, has been to the gardens, and then she said
Yeah,
the same thing, that
yeah,
one of her best visits anywhere ever. And
very memorable.
yeah, yeah. So Jamie, thank you so much for your time today. And I am surprised that I'm getting you you're done 5 minutes ahead of the clock. Which on Saturday not that big of a deal, but it's been a wonderful episode. Thank you so much for your time today. I look forward to have you back later, uh, as uh, as Air Parametric matures, and
Absolutely. No.
that yeah, looking
Keep an
forward
eye
to
on us. We're
see you.
excited. We're moving forward, and I'll be more than happy to come back on again. It was a pleasure, Tony.
Thank you.